I've never seen data like this in my life before, okay? And I've looked at tons and tons and tons of data, for stock prices, bond prices, commodity prices, I've studied all these things. I've never seen a power law like Bitcoin. This is very, very unusual, right? In 10 years, it's going to slow down. It's going to only grow at 30%. In 20 years, it's going to grow at 20%, right? In 30 years, we're going to be down to 10% growth. You have to be so careful because the danger here is if you miss those critical moments, you actually will have negative return.
Welcome back to our channel. Fred Krueger starts by examining the patterns of past Bitcoin bull markets, highlighting how most of the significant price action occurred within short, explosive periods. For instance, in the 2013 bull market, the majority of Bitcoin's appreciation happened between October and December. During these 3 months, Bitcoin's value surged dramatically, accounting for 85% of its gains for the entire cycle. This means that an investor could have ignored Bitcoin for years, only to jump in during these 3 months and still capture the bulk of the profits. Krueger emphasizes the danger of trying to time the market. If investors are out during these critical periods, they risk missing the substantial gains that Bitcoin can offer. For example, missing just a couple of months in the 2020 bull market could have meant buying Bitcoin at $45,000 instead of $10,000, severely limiting potential profits. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
If you go over the 2013 pattern, right? Most of the action in the 2013 bull market, right, was from October 2013 to December 2013, right? That was where, like, you could have been out of Bitcoin completely, okay, up until like September, October, and then you would have made 85% of all of Bitcoin's appreciation just by being there those 3 months. I mean, you literally could have sat out the first 3.5 years of Bitcoin. You could have. You just show up in September 2013, buy Bitcoin, and if you got out in January of 2014, you would have captured 85% of the value of Bitcoin, right? Next bull market, right? 2017. Again, and that one I remember very well, right? But like 2017, it went up, it started the year at 1,000, but then it really never got much below 6,000 for most of the year, okay? And then at the very end of the year, it suddenly broke 10,000. I want to say it was, just without looking, I want to say it was like September, October again. And then or maybe it was even later. And then finally it broke through and it hit almost 20,000. But that move from 10 to 20, actually that move was only 1 month.
Crazy.
So really this thing happened in just the end of 2017. And then the other big move was in, the other big move was in 2020, early 2021, right? And again, that was really October of 2020 to January of 2021. And then and again, after those 3 months, it's over. People talk about these cycles, but it's not capturing the cycle, it's capturing the bull market during the cycle, right? Like, so if you're out, let's just say you're out. Let's just say in 2020, you were not convinced that Bitcoin was a good deal, right? And let's say you missed 2 months out of the 3 months of that thing. Well, you're not going to, instead of getting involved at 10,000, you were going to get involved at 45,000. Just literally by missing 30 days, right? and then you're going to be like, well, okay, got involved at 45,000, went to 60,000. I made a little bit of money. So my point is, you have to be so careful because the danger here is if you miss those critical moments, you actually will have negative return. Holding Bitcoin could be a negative return thing. So you have to, and that's even before taxes. so it's so dangerous to try to time this thing that you really, really should not do that. And so that's what I think just looking at this data very carefully tells you. Now, of course, you don't 100% know, is the future going to repeat the past? But you look at these power laws and stuff, and the future does seem to be very consistent with the past, right? There's definite patterns here. This does not look like a random walk. This looks like there is a very clear pattern here, and people say, well, Fred, this is just drawing lines in a graph. I'm like, no, it is not. Like, this is something that is, I've never seen data like this in my life before. Okay, and I've looked at tons and tons and tons of data, for stock prices, bond prices, commodity prices. I've studied all these things. I've never seen a power law like Bitcoin. This is very, very unusual, right? If you start with the idea that every time that we get a halving, right, that the price should double over a halving. Let's just say that was the case, right? That's an intuitively appealing concept, right? Because you're like, okay, there's half as much new supply, therefore the price should double. Well, okay, so that's sort of like doubling the grains of sand on a chessboard, right? And what we know what that leads to, right? Which is, after the last thing on the thing, you have, more sand, more grains of sand than the weight of the earth or something, right? Because this exponential just grows. And the power law grows fast initially, but then tapers down. So I think, one of the things that I've really tried to do is try to explain it in simple terms that people can understand. And I think the best way to explain what a power law means now is kind of like Bitcoin's growing at about 40% per year. That's the trend line, right? But it could go negative. It could, obviously it did in 2022, right? But in log space, it's growing at 40%. It's growing at 40% compounded rate, right? So the slope is that. But in 10 years, it's going to slow down. It's going to only grow at 30%. In 20 years, it's going to grow at 20%, right? In 30 years, we're going to be down to 10% growth, right? So we're in this, and back in 2017, we're almost at 100% growth, right? So the growth rate is slowing down in terms of percentages. It's not slowing down massively. I mean, 40% is still enormous, right? It's an amazing growth rate, but it's not what it was in 2017. So it's sort of, think about this as sort of slowing growth, and also the volatility around the growth seems to be slowing as well.
Krueger argues that understanding this power law growth can provide a strong reason to be bullish on Bitcoin for the long term. While the precise future growth rate is uncertain, the historical data suggests that Bitcoin will likely continue to appreciate significantly. Whether it grows by 5x, 10x, or even more over the next decade, the trend supports substantial long-term gains. He emphasizes that these models are not precise tools and should be used as part of a broader investment strategy. The key takeaway is that Bitcoin is likely to continue appreciating, making it a worthwhile investment for those willing to hold through the volatility.
I think the only thing the power law should do to you is convince you that Bitcoin probably is going to go much higher in the next 10 years. And that's it. Yeah. Just stop there, Stop there. And how much higher? Well, I don't know. It could be 5x. It could be 10x. It might be more. Who knows? It might be 20x. But if something's going up 5x in the next 10 years, you want to buy that thing. And you don't really need to sit there and yell at people because you think it's going to go up 10x and they think it's only going to go up 5x, or they think it's going to go. I don't care. These models are not that precise. We don't know. Bad things can happen. Who knows? These are not precise tools. But it is pretty interesting, and I think it's a pretty good reason to be long Bitcoin. I think as part of one of your reasons in your conviction arsenal. If you look at it and you say, well, I'm going to put the time in years since the beginning, and then I'm going to put the log of the Bitcoin price, you see more of a pattern. Now you see it's sort of arcing, and it sort of looks like, okay, it's going up according to this curve. Okay, there's sort of a curve here. Okay, that's kind of interesting. And then you say, well, wait a second. Now let's look at the time on a logarithmic basis and the price on a logarithmic basis. So you look at both on a log basis. Now the curve just jumps out at you, and you see, oh, okay, this is a line, And not only it's a line, but it's very sort of spread out. There's a deviation on this line. It's very tightly bound according to this line, right? So you have, the correlation coefficient, right, which is sort of the fit of the data to the line, turns out to be like 96%. So you're like, holy, how is that possible, right? Now, if you saw this over, 1 or 2 orders of magnitude, like a difference between 1 and 100, you'd say, okay, I can kind of understand that, right? But this is data that's over 15 years and spans data that goes from 10 cents to almost $100,000, right? So you have, 6 or 7 orders of magnitude, right, of data. And, over this 1 million X difference, right, 10 to the 6, you have a very linear relationship. And you just do not see that, okay? You do not, that is the crazy thing. You don't see it. Now,
Krueger discusses a log-log analysis of Bitcoin's price data. By plotting both the time and price on a logarithmic scale, a clear linear relationship emerges. This linearity over multiple orders of magnitude from 10 cents to nearly $100,000 is highly unusual and underscores the unique nature of Bitcoin's price dynamics. The correlation coefficient of this relationship is around 96%, indicating a very tight fit to the line. This high correlation over such a vast range of data points suggests a strong underlying pattern in Bitcoin's price movements. Please like and subscribe my channel.